Ever wondered what these things called mutual funds are and how they work? Hello, everyone. I'm Matt with Carlin Financial Group. For the best retirement information and to help make sure you don't outlive your money, subscribe to our channel and don't forget to ring the bell to be notified when we post new videos. Now, over the years, I've come across many folks who told me that they had mutual fund baskets as a portion of their investment portfolio, but few had mutual funds explained to them in terms they fully understood. They couldn't answer the question, what is a mutual fund and how does it work? So today we're going to spend a few minutes on mutual fund basics. A mutual fund is simply an investment vehicle consisting of a portfolio of stocks, bonds, or other securities. Instead of the investor purchasing those individual stocks, bonds, etc., on their own, the investor's money is pooled with money from others and the investing public into the mutual fund. The fund has a professional money manager that will actively manage and allocate those funds to different securities with the objective of helping you make money from your investment by purchasing securities that will increase in price over time, pay dividends, or create capital gains. They do this through the use of financial analysis and their professional expertise. Since you pool your money with the money from other investors, you participate proportionately in the gains or losses of that asset held in that fund. The idea is to have access to professional money management at a low price. So when you buy shares or units of a mutual fund, you're buying the performance of its portfolio, or more precisely, a part of the portfolio's value. So you're not purchasing shares of stock, but instead a share of the mutual fund. A share in a mutual fund represents a small stake in all of the securities held within that fund instead of just a single stock or bond. In fact, the average mutual fund could hold over 100 different securities. That's important because it means most of these funds are well diversified and all of your eggs aren't in just one basket. For example, if you purchase shares of Apple and the company has a bad quarter, well, you could stand to lose a great deal of value because your dollars are all tied up in that one company. On the other hand, if you purchase shares of a mutual fund that happens to own Apple stock and that bad quarter happened, you would likely lose significantly less because Apple is only a small part of the overall portfolio. Do you have questions about other types of investments you're considering or may already own? Leave a comment below and we'll address those in a future video. So how do you make money with a mutual fund? Well, you can typically earn a return on a mutual fund in three ways. Dividends can be earned on the stocks held in the portfolio and interest on bonds. You can choose to reinvest those dividends and interest to purchase more shares, or you can have it paid out to you as a distribution. Now, if the fund sells securities that have increased in price, that results in a capital gain. Most funds also pass on these gains to investors. Finally, if the fund holdings increase in price but are not sold by the fund manager, the fund's shares increase in price and you can sell your appreciated shares for a profit in the market if you choose to do so. It is important to know that unlike stocks, mutual fund share values do not fluctuate throughout the day. Instead, the price is set at the end of each trading day. Now, there are many different types of mutual funds with different objectives or different investment categories. There are sector funds that invest in certain sectors of the economy, like real estate, for example. There are commodities funds, even funds that buy shares of other mutual funds. So funds can also be categorized by their type of objective. Now, some are growth funds, looking to achieve growth of the fund over a long period of time. There's aggressive growth, moderate growth, large cap, small cap, mid cap funds that focus on providing income, equity funds, both foreign and domestic, bond funds, real estate funds, precious metal funds, tax-free bond funds. Well, you get the idea. There are lots of options out there, something for almost every type of investment. It simply depends on the investor and what they're looking for. Now, once you've decided what type of fund you might want to invest in, you should review what is known as the fund's prospectus, which is an important document that details the fund's fees and charges, minimum investment amounts, performance history, risks, and other important information. Some of the common fees you may encounter with mutual funds include management fees, transaction fees, and fees that could be charged when buying or selling shares, known as the sales load. Some sales loads are charged when purchasing shares in a mutual fund. Others may be charged when selling the shares. These fees can vary and should be detailed in the prospectus of the individual fund. Obviously, when making any investment, you want to have a basic understanding of how it works, how it makes money, what are the risks associated with that investment, and what it may cost you. If you don't have time to research and analyze many individual stocks or bonds and are looking for a simple way to make a diversified investment that is managed by a financial professional and could allow you access to a wide variety of investments, a mutual fund may fit your needs. If you'd like help in deciding which funds may be right for you and for your unique situation, you can learn more about working with us and apply to become a client using the link down below in the description. We hope this information has been helpful. Don't forget to give us a thumbs up and pass it on to a friend or family member. And make sure you subscribe to our channel and ring that bell to be notified when we post new videos. Thanks for sharing a bit of your day with us. And as always, live today, plan for tomorrow.